Let's start with clubbing. Name of the chapter is? Name of the chapter is? No. Wrong name. Income of other persons. Other persons. Includable. Includable in the total income of the assessee. This is the name of the chapter. But we call it what? Clubbing. Short and simple name. Clubbing means, to club means to add. To club means to add. So if I say that I am clubbing something in my income, meaning that I am adding something in my income. Yes or no? So what they are telling you? That assessee, in your total income, no, will include the income of other persons also. Bloody the assessee will think, I don't like my income to come in my total income. Why are you including someone else's income in my total income? Hello? Is it a good thing to do? Good thing to do. You will like that if the government will include someone else's income in your total income. Will you like it? You will not like it. Why? Because you would like to pay tax on your own income, no? Why would I pay tax on the income of someone else? Why are you including that income in my total income? This is bad. You should not be doing this. Government, please stop. Government will not stop. Law will not stop. We will include others' income in your total income. Why? Because see, the other person who is earning the income, no, that income is not his income. It is your income only, which you have transferred on the name of that other person. This income should have been coming in your total income, but you did not want that this income should come in your total income, so you have shifted that income in the hands of some other person, thinking that we will charge this income in the hands of that other person. You are trying to fool us by showing us that, see, I am not earning. Who is earning? He is earning. Take the tax from him. Yes or no? But actually that income belongs to you. It should come in your total income. But why you will do that? Why you will try to say that no, this income is not my income. This is the income of that person. Why you will do that? Because bloody you are already an assessee whose total income is more than 10 lakhs. You are already under the 30% slab. Now whatever extra income you are getting over and above that 10 lakh is getting taxed in your hands at what rate? 30%. So instead of taking that extra income over and above 10 lakh rupees, whatever extra income is coming to you, instead of taking that income on your name and paying 30% of tax, you are shifting those incomes on the name of other persons. Your relatives, spouse, children, brother. And by shifting those income on their name, you are telling the government that, okay, government, see, this is not my income, this is the income of my bro. Government, this is not my income, this is the income of my spouse. Government, this is not my income, this is the income of my minor child. Because if the government will start taking that income as income of other person, that other person is not going to pay any tax on that, because he is also getting basic exemption limit just like you. And even if he will pay tax, at the most he will pay how much? 5% or 20%. But still the tax to be paid to the government will be less as compared to the tax which you are going to pay at 30%. For example, you have a bank FD. You have a 1 crore rupees. How much? And let's take one example. On that bank FD, you are getting an interest of 7%. What will be the total interest for the year? 7 lakhs. Now, if that 7 lakh comes in your bank account on your name, so you will have to show that 7 lakh as your income under the head IFOs. And that income is over and above 10 lakh rupees. Yes or no? So on that 7 lakh, how much tax you are going to pay? 2 lakh 10,000. 7 lakh into 30%. The government, you will spend how much tax? 2 lakh 10. So income is coming how much? And out of that 2 lakh 10,000 will go to the government in the form of tax. Would you like it? So to avoid that thing, what you have done? You have instructed the bank. That bank, I am having 1 crore rupees of FD in your bank. Hello? From now onwards, that interest must be credited in the bank account of my brother. I am giving you a bank account. In that bank account, the interest of this FD should be credited. So as per my instructions, the bank credited that interest in a separate bank account, which is not my bank account. It is the bank account of my brother. It can be bank account of my father. It can be bank account of my spouse. It can be bank account of any person. Now just imagine, if my brother's account I have opened in that bank and I am instructing the bank to credit that interest in the bank account of my brother. Have I given my FD to my brother? Did I give this 1 crore FD to my brother? No. Is this FD belonging to him? So the interest on that FD, how does that interest become his income? It is just according to my instruction, the bank is just crediting that interest in the bank account of my brother. And now my brother will receive how much? 7 lakh in the bank account. I will tell my brother, bro, listen, withdraw that 7 lakh rupees. Keep 50,000 rupees. Gift from me. I'm your elder brother, no? So for my younger brother, I can at least do that. That you are taking so much care of your brother. You are taking my 7 lakh rupees income in your bank account. Okay. Keep 50,000 out of that. How much? Your brother will be yelling, I will have to pay tax. You are not liable to pay tax. You are just a college going student. Not earning anything. Earlier, were you earning anything? No. So right now you have started earning how much? 7 lakhs. So in the eyes of law, you are earning how much? 7 lakhs. Right now, we will follow default tax regime. We will follow that 7 lakh will be your total income. Hello? On first 4 lakh, basic exemption. Balance 3 lakh, only 5%. So 3 lakh into 5% will be 15,000. And do you remember, up to 12 lakh your total income is there. You get rebate. Entire 15,000 will go for rebate. Earlier were you paying any tax? No. Right now also you are not going to pay any tax. Understanding? So withdraw that 7 lakhs. Keep your 50,000. Give me back my 6 lakh 50. My brother will happily do that. Happily he will do that. Now did I receive my 6 lakh 50 back? If I would have taken that amount in my bank account, that would have been treated as my income. On that I would have paid how much tax to the government? 30%, 2,10,000 I had to give to the government. Yes or no? But how much I gave to my brother? Did he pay any tax? Am I liable to pay any tax on this to the government? If the government will come and ask me, I will say I have not received any 7 lakh rupees of income. See my bank account. If my bank account does not have that income, how can you say that I want that 7 lakh rupees? No income. But out of that 7 lakh, 6 lakh 50 is received. Hello? 50,000 gone. But I have saved a tax of rupees 2 lakh 10,000. Net 1 lakh 60,000 tax I have saved. This will improve my and my brother's relations also. Hello? And I will not pay tax to the government also. The money belonging at my home will remain at my home only. 6 lakh 50 come to me and 50 will be kept by my brother. Enjoy. Likewise, I have 10 family members. On everyone's name, I will start taking some income. Big people, rich people, why? How do they become rich? By doing all these things. You start doing businesses on the name of their brothers, minor children. The businesses are started on the name of those businesses. Bloody, if you want to earn income, then earn income on your name, no? Now by doing this, what is happening? Government is losing how much tax? No, I am saving 1 lakh 60, but the government is losing entire 2 lakh 10,000. If that income I would have shown as income in my total income calculation under the head IFOS as interest on FD, how much tax I would have paid? 2,10,000. So government has lost that entire 2,10,000 and government has not got a single penny of tax on that income. Just imagine what is the population of our country. 150 crores. 140 was 5 years, 6 years back. Approximately 150 crores is the population of our country. I am one of them. How much tax I am saving? How much tax I am saving by doing this? 2,10,000. How much is the population? 100 and forget about 150 crores. Out of 150 crores, only 10,000 taxpayers in a year, if they do this. Not 150 crores, huh? That is a huge number. But out of the entire population, if 10,000 persons like me are also there, saving how much tax? 2,10,000. Calculate. 2,10,000 into 10,000 persons saving this much tax. This is the tax revenue loss to the government. Small amount, or big amount? So don't you think that the government should be bringing some provisions to reduce these type of practices? Hence clubbing provisions are there. Understanding? So, because of the clubbing provision, now what will happen, you know? Who is earning that income? My brother is earning that income, no? Brother is earning income from what? FD. Did I transfer the FD? Without transferring the asset, the income of that asset, if I will transfer, there is one section 60, which says that if any person has transferred the income without transferring the asset from which the income is coming, yes or no? Then the income so transferred will not be transferee's income, it will be clubbed in the total income of the transferor. So section 60 will apply. And what I wanted to do, I wanted to divert that income on the name of my brother. Section 60 got attracted because they came to know that without transferring the asset, the income is coming from an asset. Without transferring that asset, only the income of that asset is transferred. Then that income will not be treated as income of the transferee. It will be treated as the income of the transferor. Will be clubbed in his total income. So I wanted to shift that income out of my total income. They applied section 60, clubbed in my total income. Now that income should belong to my total income. It came in my total income. On that income I should have paid how much tax? 30%. I will pay 30% because of this clubbing provision. Getting my point? Hello. So how many sections we are supposed to do? In the clubbing, no, we are supposed to do 60, 61, 62, 63, 64 and 65. These many provisions we are supposed to do. Okay, no? Now in section 64, no? In section 64, there are 3 subsections. How many subsections? 64 subsection 1, 64 subsection 1a and 64 subsection 2. In 64(1) also there are different clauses. Clause 2 is there, clause 4 is there, clause 6 is there, clause 7 is there, and clause 8 is there. Yes or no? These are the different cases. So first case is 60, then 61, then in 64 subsection 1 is there. In that 1, 2, 3, 4, 5. 5 cases. 6th case, 7th case, 8th and 9th. 9 cases are there. In any of these 9 cases, what did I say? If you fall in any of these 9 cases, then the income earned by other person will not be treated as other person's income. It will be clubbed in your total income. It will be included in your total income. Because in all these 9 cases, what you do? You have shifted your income on the name of some other person. so that you can save tax, and because of that the government is losing the tax revenue. Understood? So which is the first section? 60 says that, I have already taught you section 60. Already section 60 is done. What section 60 says? Transfer of income without transfer of. So the asset from which the income is coming, that asset is not transferred, but only the income of that asset is transferred. So are you a transferor? Yes. Have you transferred your income? Yes. To any transferee? Yes. So transferor can be any person, transferee can be any person. So any person has transferred his income from any asset to any person without transferring the asset. What did I say? Without transferring the ownership of the asset, generating such income, then whatever income transferred to the transferee will not be taxable in the hands of transferee. It will not be treated as income of the transferee. Section 60 will get attracted, and that income will be clubbed in the total income of the transferor. The example which I gave was that only. I was earning income from what? I was earning income of FD. FD is an asset. Can I earn interest on debentures? Can I transfer the income of debentures? Yes, without transferring the debentures. Can I earn house property income? Yes, without transferring house property. Can I transfer the rental income of house property? Any type of asset generating any income without transferring that asset, you are just transferring the income of that asset. No, section 60 will be attracted. You have the bloody ownership of the asset. Then how do we even think that you are not getting the income of that asset and somebody else is getting the income of that asset? That person who is getting the income of that asset is not the owner. Who is the owner? You are the owner. So you should be getting the income of that asset on your name. Then why the bloody hell that other person is getting the income of that asset? And if he is getting, no, meaning that you have transferred your income on the name of that other person. Will not charge that income in the hands of that other person. It will be clubbed in your total income. Will you remember this? Section 60 over. So 60, 61, 62, 63, 64 and 65. 6 sections we are supposed to do. 1 section we have done. 60. But in section 60 you have to be very careful. The provisions of section 60 are applicable in the case of any transferor. Transferred the income to any transferee. Transferor and transferee can be any person. Company has transferred to individual. Individual has transferred to partnership firm. Partnership firm has transferred to partner. Yes or no? Or any individual has transferred on the name of brother. Any individual has transferred on the name of that partnership firm where he is a partner. So transfer can be by any person. The income can be transferred by any person to any person without transferring the ownership of that asset. Then section 60 will get attracted. Yes or no? Read this example. So instead of rent, in my example, what we transferred? Interest. Instead of house property, what was the asset? FD. Yes or no? Same type of example. Did you understand? Now just imagine, if this section 60 is there. Now if I know that section 60 will apply, if I will transfer just the income and not the asset. So to avoid the clubbing under section 60, what will I do? That the income also gets transferred and that income also does not get taxed in my hands by applying clubbing provisions of section 60. To avoid section 60, what I will do? Definitely I will transfer my asset also. You are saying no, that if you have transferred your income without transferring the asset, then clubbing will be there. I will transfer my asset. I will transfer my, but I will transfer the asset. I'm not a mad person. That just to avoid the tax on that income, I will give away my asset to anyone like this. I'm just giving the asset, I'm just transferring the asset so that section 60 does not apply. But I will transfer the asset in such a way that the control of that asset is still with me. Revocable transfer. Which transfer? Whenever I want, I can take the control of that asset back to me. By putting that condition, I have transferred the asset. From today, the asset belongs to you. But wait, at the time of transferring the asset, I will put a condition that I'm just giving you an asset, but whenever I want, I still have the right to repossess the asset, take the control over the asset or the income. That means the opposite party is just a puppet. Just to show that no, see, I am not the owner, he is the owner now. The person who is earning the income, no, he is the owner. But bloody, if he is the owner, you have transferred the asset to him, then why have you still kept the control over the asset? Why have you put that condition? That I can take the asset back in my control. I still have that right. I can take the income of the asset in my control whenever I want. I still have that right. If you still have that right to take the asset back in your control, take the income back in your control, that means you are just transferring to avoid the provisions of section 60. Or you can say that okay, I am transferring the asset, but after 5 years the asset will again come back to me. So you are putting a condition at the time of transferring the asset that the asset or the income of the asset will be directly or indirectly will be retransferred to me. Then you are just transferring the asset to avoid the provisions of section 60. We'll catch you in section 61. 61 is made for people like you only. Fooling us. Transferring the income without transferring the asset, we will club. Oh, so to avoid that clubbing, you have now transferred the asset. Now the moment you are transferring the asset, we'll check that the transfer was a genuine transfer or not. You are just transferring the asset by saying that. Asset is transferred. The transfer is what? Revocable transfer. Which transfer? Revocable transfer. And whenever the transfer of asset is taking place, it shall be treated as what? Revocable transfer if the transfer contains any provision for what? Any provision for retransfer of what? Retransfer of the income or the transferred asset, directly or indirectly to the transferor. So I am just transferring the asset and the transfer contains a provision. The transfer contains a provision. That's it. The income or the transferred asset will be directly or indirectly be retransferred to me. If this condition you are putting and transferring the asset, then the transfer we will consider as revocable transfer. Because the asset or the income of that asset is getting retransferred to you only, directly or indirectly. Getting my point? Then this transfer is just to avoid section 60. This transfer will be treated as revocable transfer. Or transfer gives in any way to the transferor a right to reassume what? Power. Right to reassume the power directly or indirectly. Directly or indirectly over the whole or any part of the income or transferred asset. So I still have the right. If I am transferring the asset, but in the transfer document, I have kept that right with me. That okay, I am transferring the asset to you right now, okay. But I still have the right to take the control over the asset or the income, directly or indirectly. Then you are doing this transfer just to avoid section 60. We will consider this transfer also as revocable transfer. So if asset is transferred for 5 years, after 5 years the asset will come back to me. Revocable transfer. Because you have put a condition that asset will be coming back to you. Okay. No. I'm not putting that condition. Asset is yours. Asset is yours. Asset will not come back to me, but whatever income will be there, no, that income will be retransferred to me. So bloody the person who is having the asset is not enjoying the income. That income will be retransferred to you directly or indirectly. The transfer is revocable. So within this much time, the asset will come back to me. Within this much time, the income will come back to me. Keep on earning the income for 5 years. After 5 years, keep on earning the income for 10 years. After 10 years, that income, entire income, you are supposed to give it to me. Yes or no? If all those conditions are given in the transfer deed, that means the transfer is a revocable transfer. As and when I want, I can take the asset back in my control. Oh, no, I will not take the asset back in my control. You keep the asset, I will take the income in my control. As and when I want. If all these points are there at the time of transfer, then it is proved that transfer is a revocable transfer. When the transfer will not be a revocable transfer? Come on, tell me. If I am giving the asset, saying that I don't want the asset also, I don't want the income also, that asset or income will not be transferred to me directly or indirectly, then it is irrevocable. I don't have any right to reassume power. I don't have any right to take the asset in my control or income in my control. I don't have any right. I am not keeping that right with me. Then it is irrevocable. Understanding? But something like this happens at the time of making the transfer, then this transfer is a revocable transfer. Yes or no? Definition of revocable transfer. Section 63 done. 60 done. 63 done. 63 is the definition of revocable transfer. If you are transferring your asset like this, meaning a revocable transfer is done by you. So from this asset, the transferee will earn income. That entire income which the transferee will earn will be treated as your income. It will be clubbed in your total income. That is section 61. That is section 61 is also done. So what is 61? Transfer of asset. What type of transfer? Revocable type. Revocable transfer. Yes or no? So revocable transfer of asset is taking place. And from that transferred asset, whatever income that transfer is earning, that entire income will be clubbed in the hands of transferor. Section 61. Because this is done to avoid the provisions of section 60. Now tell me, if I am telling the transferee that okay, this asset will generate 10 lakh rupees of income. How much? Take this asset. This asset will generate 10 lakh rupees of income. So the asset is transferred, revocable transfer. Asset is generating an income of 10 lakh. How much income will be clubbed? 10 lakh. Entire income has to be clubbed, remember. But if I have told that transferee that okay, don't worry, keep 1 lakh with you. Only transfer 9 lakh rupees of income. So some income is used for the benefit of the transferee. Can I say that the income which is used by the transferee for his benefit should not be clubbed? I cannot say. Even if from the transferred asset, some income is used for the benefit of the transferee, yes or no? I cannot say that the income which he is using for his benefit should not be clubbed. First of all, this asset you have transferred by way of revocable transfer. So whatever income of this asset is there, no, had to be your income only. And out of that income, if some income is kept by the transferee for his benefit, no, we are not going to give you any benefit of doubt for that. Entire income of that income Even if some income is used for the benefit of the transferee, will not be left. Even that income will also be clubbed. Entire income. Understanding? Hello, sir. So pay attention here. See, revocable transfer of asset. Section 61. Transferor can be any person. Transferee can be any person. Asset is transferred. What type of transfer? So meaning of revocable transfer is given in section 62. We have just now seen. Yes or no? So if the asset is transferred, then income from the asset transferred by way of revocable transfer by the transferee, that entire income will be clubbed in the hands of transferor as per section 61. Read note. Clubbing provisions of section 61 shall be attracted even if part of the income from transferred asset is applied for the benefit of the transferor. Once the transfer is revocable, entire income of the transferred asset shall be liable to be clubbed in the total income of the transferor. I have already told you. Yes or no? So 60. Transfer of income without transferring the asset. Income will be clubbed. 61. Revocable transfer of the asset. Income of that asset will also be clubbed. 63. Definition of revocable transfer. Now section 62 are the exceptions. 62 are the exceptions to section 61. In these two cases which I am going to discuss now, section 61 will not apply and clubbing will not happen in the hands of transferor. But only in these two cases. So I am a transferor. Have I transferred my asset to the transferee or the beneficiary? Yes or no? And I have transferred the asset putting a condition that the transfer is not revocable till your lifetime. Till whose lifetime? Lifetime of the transferee or the beneficiary. It will not be revocable. Meaning, am I going to get any benefit of the asset? Is the asset coming back to me? No. Will the income come back to me? No. Will I have the right to take the control over the asset or the income? No. So I am not going to get the asset or the income transferred on my name till the time you are alive. I don't have any right also to take the control over the asset or the income till your lifetime. Till the time you are alive, you are everything for this asset. Asset belongs to you, income also belongs to you. Yes or no? But it is only till your lifetime. The moment you die, transferee, the moment I will have the right to take the control over the asset and the income, but not till the time you are alive. Understanding? So that right is coming to me, right to revoke comes to me till the time you are alive? No, it will come after your death. So till the time the transferee is alive, section 61 will not be applicable. Understanding? Entire income will be taxable in the hands of transferee. But wait. Only if the income of that asset is not directly or indirectly used for the benefit of the transferor throughout the lifetime. If that happens, then automatically the transfer will become revocable transfer. So till your lifetime, what did I say? Till the lifetime of the transferee. Will the asset or the income be transferred to me? No. Till your lifetime, do I have a right to take the asset or the income back in my control? No. So till the time the transferee or the beneficiary is alive, the transfer is irrevocable. So till that time, provisions of section 61 will not be applicable. Clubbing will not happen in my hands as per section 61. Yes or no? Provided. What did I say? Provided during his lifetime, I am not taking any benefit of the income of that asset. If I start taking the benefit of that income, automatically the transfer will become revocable. Understanding? Now, the moment that transferee dies, beneficiary dies, will I get the right to take the asset back in my control? Yes or no? So from that time onwards, the income will be taxable for me. Whether I actually exercise that right and take that asset in my control or not is irrelevant. Even if I have not taken that asset in my control, still the income of that asset will be taxable for me the moment the transferee dies. And I get the right to take the asset in my control. Whether I have taken the asset in my control or not is irrelevant. The moment that right will come after the death of the transferee or the beneficiary, from that moment onwards, the income of that asset will be taxable in my hands. Understanding? First exception, did you understand? So who is this? Transferor. Can be any person. Who is this? Transferee or beneficiary. Can be any person. Asset is, but transfer is not revocable during the lifetime of the transferee or the beneficiary. Understanding? Then whatever income from that asset the transferee or the beneficiary is earning, that income will not be liable for clubbing in the hands of transferor. Section 61 will not apply. But this section 61 will not apply. Clubbing will not happen only if transferor does not derive any direct or indirect benefit from such income during the lifetime. If he starts taking direct or indirect benefit from the income of that asset, that means the transfer does not remain irrevocable, it becomes revocable. Understanding? Now note, if the transferor derives any direct or indirect benefit from such income during the lifetime of the transferee, then such income shall be liable to be clubbed in his total income, even though the transfer was not revocable during the lifetime of the transferee. The moment you will start taking the benefit, from that time onwards, the income will be taxed in your hands, even if it was not revocable during the lifetime. Understanding? Now the second case. See, now from this year onwards, from 1st April 2026 onwards, which is the date I am saying? 1st April 2025 onwards, new income tax act is, 26. 1st April 2026 onwards, new income tax act is applicable. Which is that new income tax act? 2025. New law will be applicable with effect from 1st April 26. But you don't worry, in your exam, this law is only going to come. May 26, September 26 and Jan 27. Yes or no? But prior to this act, the current act which we are learning, that is Income Tax Act 1961. Now in this law, in the Income Tax Act 1961, the current law which we are learning, in this law what they have said? That any transfer will be a revocable transfer if the transfer contains a provision that the asset, transferred asset, or the income of the transferred asset, directly or indirectly, will be retransferred to me. Within how much time? Within any time. The time can be 2 years, time can be 5 years, time can be 10 years, time can be 100 years also, 50 years also. The moment you have said that I am transferring the asset for this much time, after that time is over, the asset will be retransferred to me. That transfer is a revocable transfer. So how much time? The time can be 2 years also. I am transferring my asset to you for 2 years. After 2 years, the asset will come back to me. It is a revocable transfer. Hello? I am transferring my asset. Today I am transferring my asset in 25-26. And that asset will again come back to me in 2050-60, 50-51. 2050-51, that again asset will again be retransferred. So I am transferring right now by saying that the asset will be retransferred to me in which year? 50-51, 2050-51. Till that time you keep the asset, no? It is a revocable transfer. I don't have to see that for how much time asset remains with you. If it remains with you for 2 years also, 5 years also, 6 years also, 10 years also, yes or no? The moment I said that the asset will be retransferred to me, the transfer is a revocable transfer as per this law. Yes or no? But prior to Income Tax Act 1961, there was one more law in India, income tax law older than this. And that Income Tax Act was Income Tax Act 1922. That got repealed and this law came. And now this is getting repealed, a new law is coming. So we are learning which law? As per this law, if you put a condition that the asset will be retransferred to me after certain number of years. How many years? As many can be there. Yes or no? After 5 years also, after 10 years also, after 50 years also. Yes or no? After these many years, if the asset will come back to me, retransferred to me, that transfer is a revocable transfer. That transfer is a revocable transfer as per Income Tax Act 1961. But old law was there. Income Tax Act came into existence on what day? 1st April 1962, meaning assessment year. 1st April 1962, meaning assessment year 62-63 onwards. But in terms of previous year, if we say, then the Income Tax Act became applicable from which previous year? 61-62, meaning 1st April 1961 onwards. Understanding? Prior to that, prior to 1st April 1961, meaning prior to assessment year 62-63. In terms of assessment year, if we say, then prior to 1st April 1962. But in terms of previous year, if we say, then prior to 1st April 1961, when this law was not applicable, old law was applicable. And as per old law, 1922, that old Income Tax Act law, any transfer will be a revocable transfer if it contains a provision that the asset is transferred for a period of 6 years or less. So if you are transferring for how many years? 6 years or less, then again asset will come back to you, then it will be revocable. This is not as per current law, this is as per old law. Understanding? But if you have transferred the asset for a period of more than 6 years and after 6 years the asset is coming back to you, yes or no? That type of transfer was irrevocable transfer as per the old law. So for example, if you have transferred your asset at any time prior to 1st April 1961, meaning you have transferred your asset prior to 1st April 1961, saying that the asset will come back to me in 2025-26. That means you have transferred the asset for how many years? More than 6 years. That transfer was a irrevocable transfer. So till the time the asset will remain with the transferee, income of that asset will not be clubbed. So let's take one example. Okay, let's take one example. The asset transferred in 56-57. Previous year 56. Can I say asset was transferred prior to 1st April 1961? Yes or no? And that time when I transferred the asset, no, long back. In 1956-57, at that time I transferred that asset to you. And that time I told that right now I am transferring the asset. Right now I am transferring the asset and that asset will come back to me. That asset will come back to me in previous year 30-31. Which previous year? So today I am transferring for a period of more than 6 years. But I transferred when? Prior to 1st April 1961. And I transferred for a period which is more than, this transfer was a irrevocable transfer. That time this transfer was an, so till 2030-31, whatever income from that asset is coming will not be clubbed in my hands, provided I am not taking any benefit of the income till 30-31. Now in 30-31, will I have the right to repossess the asset? Yes, I have transferred this asset till 3031. Yes or no? Will I have the right in 3031 to repossess the asset? Yes. So whether I am taking the asset in my control or not, from 3031 onwards, the income will be taxable in my hands. Understanding? But this type of transfer for a period of more than 6 years should have been made prior to 1st April 1961. Sir, you have written 1962. This is from the point of view of assessment year. But from the point of view of previous year, if you say, then this is 61. Understanding? Now what if I have transferred the asset in previous year 76, 77. 76, 77. Tell me. Have I transferred the asset prior to 1st April 1961? Or I have transferred the asset on or after? No, right now, no. Old law is not applicable. In that year, Income Tax Act 1961 was applicable. And as per Income Tax Act, you are transferring the asset for any number of years. Whether the number of years is 6 years, less than 6 years, more than 6 years, that transfer will not be treated as irrevocable. This will be a revocable transfer. Bloody, if you have put a condition that the asset will again come back to you, within how much time? Within whatever time. If you have given the condition that the asset will be retransferred to you, that transfer is a revocable transfer. Yes or no? From the moment the asset is transferred, from that moment itself, it is a revocable transfer. So from 76, 77 onwards, whatever income of that asset will be there, will be taxable in your hands. Because it was a revocable transfer. But if that same transaction happened prior to 1st April 1961, and the transfer was made for a period of more than 6 years, that time it was treated as irrevocable. So you have made a transfer as a irrevocable transfer at that time. So from this asset, whatever income is coming will not be liable for clubbing under section 61 till the time you don't get the right to take the asset back in your control. Understanding? The moment that right will come, from that year onwards, whether you have exercised that right, taken the asset in your control or not, from that year onwards, the income of that asset will be taxable in your hands only. Understanding? But what if the asset is transferred on or after 1st April 1961? What if the asset is transferred on or after 1st April 1961? New law, Income Tax Act 1961 is applicable. And as per Income Tax Act 1961, if you transfer the asset for a period of any number of years, but if you say that the asset will be retransferred to you, that transfer is a revocable transfer. Whatever may be the number of years, we don't care. Understood? So 2 exceptions. Will you keep in mind? 60 is done, 61 is done, 62 is done, and 63 is done. Only 64 and 65 are pending. Clubbing chapter will be over. And in section 64, there are 3 subsections. 64.1, 64.1a, 64.2. 64.1a you already know. Clubbing of minors income. But I have to discuss a little bit extra points in 64.1a. Okay, no? But first, let's discuss 64.1. 64. So, did you understand? Sure, everyone? Keep these things in mind now, because these things are going to be exploited in the question. So, tell me, what is there in section 61? What is there in section 60? First of all, transfer of income without transferring the asset. That income will be clubbed. 61, revocable transfer of asset to avoid section 60. Yes or no? Revocable transfer of asset has taken place. So whatever income of that asset which is transferred, whose revocable transfer has taken place, the income of that asset will be clubbed. Section 62, exceptions to section 61. Section 63, definition of revocable transfer. Done. Now let's move to section 64, subsection 1. Okay. Now see, this entire section 64 will be applicable if the assessee is an individual. 60 and 61 will be applicable if the assessee is any person. But section 64 will be applicable only if the assessee is an individual. So whatever points I'm going to discuss here, 64.1, 64.1a, 64.2, I'm going to discuss from the point of view of an individual. Understanding? So now let's take one example. Okay, this is an individual. This is an individual. Okay, Mr. X. Now Mr. X has some substantial interest in any concern, business concern. That concern can be a partnership firm, that concern can be a company, that concern can be AOPBY, that concern can be any business concern. Yes or no? Now in this business concern, Mr. X is having what? Substantial interest. For example, the concern is a partnership firm. And Mr. X is a partner in that concern. But just being a partner does not mean that he is having a substantial interest. Just Mr. X is a partner in that concern does not mean that he is having a substantial interest. When it will be considered that he is having a substantial interest here? If Mr. X is holding greater than or equal to 20% profit sharing in this concern. If that concern is any concern other than a company. And if that concern is a company, then Mr. X is holding 20% or more voting rights in that company. Yes or no? Then that concern is such a concern where Mr. X is having a substantial interest. Now substantial interest means what, you know? Mr. X can influence this concern because of this profit sharing, because of this shareholding. Because you are having this much shareholding, because you are having this much profit share in this concern, you can influence the decision of that concern. Whatever you will say, that concern will obey. That concern will agree. You have such an influence in that concern that your words will be considered seriously and they will be implemented also. And that happens only if you are having 20% or more profit sharing or 20% or more voting rights. Yes or no? Now, you yourself can have that substantial interest. For example, there is a partnership firm. In that partnership firm, I am having only 15%, only 15% profit share. Do I have a substantial interest? Yes. Still it will be considered that I am having a substantial interest if another relative is holding 10%. So my 15% plus my relative's 10%, both taken together is 20% or more. I can influence along with my relative also. So I can influence on my own also. If I am myself having 20% or more, yes or no? So this substantial interest of Mr. X alone, yes or no? Or of Mr. X and his relatives taken together. Okay. Now who is a relative? Who is a not defined? Not defined. So I will have to take the definition as given in section 241. Okay. So definition is spouse, brother, sister, lineal ascendant, lineal descendant of such individual. So if myself and my spouse, we both are holding 20% or more, I am having substantial interest. And even my spouse is also having substantial interest. If myself and my brother, we both are holding 20% or more, even I am also having a substantial interest, my brother is also having a substantial interest. Yes or no? If myself and my sister, we both are holding 20% or more, then I am also having substantial interest, my sister is also having substantial interest. We both are having that substantial interest together. Yes or no? So it is as good as I am having substantial interest. Yes or no? Myself and my lineal ascendants. You know na lineal ascendants? Lineal descendants. Lineal ascendant means my earlier generations. Lineal descendant means my generations after me. Yes or no? My kids, their kids. Okay. So, I can have substantial interest on my own also. See, I myself own 40% shares in the company. Meaning I am having substantial interest alone. I am having 40% profit sharing. I am having substantial interest on my own. Yes or no? But what if I am having only 12%? Do I have substantial interest on my own? But if any of these relatives are also holding 12%. So my 12% and my relatives 12% both taken together is how much? 24%. It is more than 20%. So it will be assumed as if I am having a substantial interest. Now, when this substantial interest should be there? When this substantial interest should be there? At any time. What did I say? At any time during the previous year. Not necessarily beginning of the year, end of the year, throughout. No. At any time during the previous year, this substantial interest should be there. Now see, now what will happen? No. Since I am having an influence on this concern, no. Now, I can shift my income coming from this concern to someone else. And who can be better than my spouse? I will tell the concern, you are a partnership firm, yes or no? I am a partner. 20% or more, profit share. So, will you give me salary? Will you give me commission? Will you give me interest? So, that concern was supposed to give me what? Income. That concern was supposed to give me what? Income. Yes or no? So, that income which I am supposed to get from this concern, I don't want to take that income on my name. Because I am already a person whose total income is more than 10 lakhs. Now that additional income which is coming, it is coming over and above 10 lakh. And if that concern is going to give that income to me on my name, don't you think on that income I will have to pay 30% tax? To save that, I am using my influence in this concern. Telling the concern, that concern, the income which you are paying me, no, don't pay me. Pay that income to my spouse, Mrs. X. Can I say Mrs. X is a spouse of Mr. X? Yes or no? So I am using my influence and telling the concern that instead of paying me income, that income which you were supposed to pay me, pay that income to my spouse on the name of what? Remuneration, salary, commission, etc. Now don't you think earlier I would have got income on my name? The income would have come to my home. Income would have come to my home, but the income would have come on my name. I would have to show that income in my total income. And on that I would have to pay 30% tax. Now tell me, where the income is going? Coming to my home only, no? But it is, instead of coming on my name, it is coming on the name of my spouse. Salary of my spouse. I am not earning anything from the concern. No. Even though I am a partner in that concern, having 20% or more profit sharing, no. That concern is not giving me anything. When checked, no, it was found that that concern is not paying me anything, but that concern is paying salary, remuneration, bonus, commission to my spouse. Sir, we checked the books of partnership firm where you are a partner. As a partner, all the partners are receiving what? Remuneration, etc. from the firm. So you are not receiving. No, I don't want to take it. Oh, and sir, we checked the details of the employees of the company. One employee's name is Mrs. X, sir. So you are not getting anything, But your wife is working here and she is getting salary. Sir, there is some problem, sir. We feel that the income which you were supposed to get on your name coming to your home, yes or no? You have taken that income at your home, but on the name of your spouse, just to avoid tax. So whatever remuneration this concern has given to your spouse because of this influence, yes or no, will not be treated as taxable income of your spouse. Will be clubbed in your total income. 64 subsection 1 clause 2 will apply. But wait, sir. We will club this income in your hands only if it is without. Only if this income your spouse is earning without any professional or technical skills, qualification, experience, etc. But if she is earning that income because of her professional or technical qualification, skills, knowledge, etc., then we will not think that you have transferred that income. Then we will think that it is her income only, will be taxable in her hands. But sir, if she is earning this income without any professional or technical qualification, skills, knowledge, that means she was not the correct person to get this income. You have transferred that income on the name of your spouse. So the remuneration given by that concern to your spouse will not be her income, will be clubbed in your total income. Yes or no? Understood? This was 64.1.2. This was 64.1.2. So 64.1.2 is applicable for every person, no? Or only individual? So are you an individual having a substantial interest in any concern? And that concern is paying remuneration, salary, remuneration, commission, etc. to your spouse without any professional or technical qualification, knowledge, skills, experience, etc. Then whatever remuneration given by that concern to your spouse will not be taxable as her income, will be clubbed in your total income. 64.1.2. But if that remuneration was given because of, if the concern is giving that remuneration to your spouse because of professional or technical qualification, knowledge, skills, which he is actually using to earn that remuneration, then that remuneration we are not going to club. Then it will be taxable as income of your spouse only. Understanding? So now for example, myself and Shrikant, we both have started a partnership firm. See, he has also become a CA and I am also a CA. Yes or no? So we started our CA firm. 50% partner Shrikant, 50% partner Umang sir. Okay. Now from that firm, I was supposed to get 10 lakh rupees of remuneration for this year. But since I am having 50% profit sharing, no, I can influence. I will tell Shrikant that Shrikant, I will not take that 10 lakh on my name. My wife is there, no? 12th fail. 12th, we will keep my wife as an accountant in the firm. Who is going to come? Nobody is going to come. Yes or no? We'll keep my wife as an accountant, handling accounts department of the firm, handling GST, income tax, this and that. And every month, we'll give her some salary, so that the total salary for the year becomes 10 lakh. That 10 lakh which I was supposed to get, we will give that salary to my spouse. Now how much my spouse is getting? Is she getting that 10 lakh because of any professional, technical qualification, experience, etc.? She is just kept as an accountant. But to do that work of accountant and get that salary, does she possess any professional or technical skills, qualification, experience, etc.? No. Then that entire 10 lakh which the firm has given to my spouse will not be the income of my spouse, will be clubbed in my total income. But if the example is twisted, my spouse is not a chartered accountant, but she is interpassed, and in her articleship and everything, she has done all this work. She possesses the requisite knowledge, qualification. And using that requisite knowledge, qualification, etc., she is working, and for that, if that 10 lakh salary is given, then that is not going to be clubbed. Understood? Sure, sir? So read this part. Clubbing. 64.1.2. Remuneration to the spouse from a concern where the assessee has a substantial interest but the spouse is not eligible to get such remuneration. Who is this? Individual. Having substantial interest? Yes. In any concern at any time during the previous year. So from this concern, whatever remuneration is given to the spouse, yes or no? Without professional or technical qualification, experience, knowledge, etc., that entire remuneration will be clubbed in the hands of individual. Done, sir? What is the meaning of substantial interest? If company is there, 20% or more voting rights. If any other concern is there, 20% or more profit sharing. Can be held alone by the individual or along with his relative. Who is a relative? Spouse, brother, sister, lineal ascendant or lineal descendant of such individual. He alone can have, or he along with his, these relatives can have that substantial interest, and the provisions will be applicable. Will you remember? Note number 1. Read this. This clubbing will not be done if the spouse possesses requisite qualification, knowledge, etc. Yes or no? Now, note number 2. Note number 2. See, before note number 2, pay attention here. This is Mr. X. And this is Mrs. X. Where is Mrs. X? This is Mrs. X. Okay. So, there is a concern. There is a concern, okay, where Mr. X is also having a substantial interest. Wait. There is a concern. In that concern, for example, can I have Mr. X is having 15% profit sharing? And for example, Mrs. X is also having 15% profit sharing. So Mr. X along with his spouse, relative, holds how much? Meaning 20% or more. So can I say Mr. X is having substantial interest in the concern? Now think from the point of view of spouse. Mrs. X is also an individual, no? She herself is having substantial interest? No. But she along with her spouse, holding how much? So even Mrs. X is also having a substantial interest. Understanding or not? So now both are having substantial interest. Both can have 20-20. Both can have 15-15. Together 30. Yes or no? More than 20. So both are having substantial interest. Yes or no? Now pay attention. This concern is giving what? Remuneration to Mr. X also. And this concern is giving remuneration to Mrs. X also. Okay. Now, imaginary example, huh? This is absolutely imaginary. This remuneration is without what? Professional or technical skills, qualification, knowledge, experience. Yes or no? And by the way, this is also without. Both are getting remuneration without professional or technical qualification, experience, etc. Understanding or not? This might happen. This case can also arise. See, if Mr. X is getting because of his technical or professional qualification, etc., then the remuneration received by X will be taxable for him and remuneration of Y will be clubbed. Hello? What if Mrs. X is getting because of her skills, etc., then the remuneration of Mrs. X will be taxable for her, but the remuneration of Mr. X will be clubbed. Getting my point? But now both are receiving without any professional or technical qualification, experience, both are receiving remuneration from that same concern. Can this be a case? Now tell me, from the point of view of Mr. X, the spouse of Mr. X is receiving a remuneration from a concern where Mr. X is having a substantial interest without any professional or technical knowledge, etc. Can this remuneration be clubbed here? Yes. Now think from the point of view of Mrs. X. Mrs. X is an individual, yes or no? The spouse of Mrs. X is receiving remuneration from a concern where Mrs. X is having a substantial interest and this remuneration is without. So this remuneration can also be clubbed. So remuneration of each other can be clubbed in the total income of both. So my question is, remuneration of X will be clubbed as well as remuneration of Y will be clubbed. Sorry, Mrs. X will also be clubbed. Yes or no? Both the remuneration will be clubbed. Option 1. Option 2. If X is also getting clubbed, Mrs. X is also getting clubbed, no need to club. No need to club. This is option 2. Option 3. Club anyone. Which is the correct option? If this type of situation arises, 3 options will be there. Club this also because this is also clubbable. Club this also because this is also clubbable. Sir, option 2, if this is also clubbable, this is also clubbable, minus minus plus. No need to do clubbing. Yes or no? Option 2, no need to do clubbing. Let them pay taxes on their own remuneration. No, no need to club. This is option 2. And option 3? No, sir. Remuneration of X will be taxable for him and Mrs. X will be clubbed. One clubbing will be done. Or remuneration of Mrs. X will be taxable for her and Mr. X's remuneration will be clubbed. Any one clubbing will be done. Which option is more suitable? Option 1, bullshit. Option 2, double bullshit. Correct option is option 3. Remuneration of Mr. X will be taxable for him. Then in that case, this remuneration will be clubbed. One clubbing will happen. Yes or no? Or alternatively, remuneration of Mrs. X will be taxable for her. And then this remuneration will be clubbed. Any one will happen. Yes or no? But you tell me, which one should happen? Sir, husband there, no? Remuneration taxable for him. Wife's remuneration clubbed in his hand. Why? Because he is husband. Whatever bullshit you'll say. Then I can say, why should boys have all the fun? Huh? Remuneration wife should be taxable to her. And remuneration of husband should be taxable to her. Why? She is a wife. Why should boys have all the fun? I cannot give any logic, no? Logic should be logical. Any one clubbing will be done. And to do that clubbing, how you will decide that no, Mr. X's remuneration will be taxable for him. And Mrs. X's remuneration will not be taxable for her, it will be clubbed. On what basis you can say that? Now you will have to first calculate the total income of both the spouses. First calculate the total income of both the spouses without giving effect to the provisions of 64(1)(2). Forget about this clubbing. Yes or no? Without doing this clubbing, without considering this remuneration for clubbing, yes or no? Other clubbings are applicable, then you have to do the other clubbings, yes or no? But without doing this clubbing of 64(1)(2), first calculate the total income of both the spouses. If the total income of Mr. X was higher, no, it will be assumed that Mr. X has shifted his income. This remuneration will be clubbed. And what if the total income of spouse was higher? It will be assumed that Mrs. X has shifted, then this remuneration will be clubbed. But for that you will have to check total income. Total income prior to applying this 64(1) to provision. I know what doubt you are having. Sir, what if both the total income are same? I'll tell you. Don't worry. About that also I'll tell you. But that is very rare. Okay. First of all, imagine that you calculated the total income for Mr. X also and Mrs. X also. And what if the total income of Mr. X was higher? Then remuneration of Mr. X will be taxable for him. And remuneration of Mrs. X will be clubbed. Why? Because his total income was higher. But on the contrary, if the total income of Mrs. X was higher, then remuneration of Mrs. X will be taxable for her and remuneration of Mr. X will be clubbed in her hands because her total income was higher. Any one clubbing will be done based on the total income. Now once the clubbing started in the hands of Mr. X, then every year the remuneration will be clubbed in the hands of Mr. X. Every year total income will not be checked. So once the remuneration of wife got clubbed in the hands of Mr. X in this year, now every year the remuneration of wife will be clubbed in the hands of Mr. X. Till the time the assessing officer feels that now the reverse should be done. If the assessing officer later on in any year feels that no, now wife's remuneration should not be clubbed, now husband's remuneration should be clubbed, then after giving an opportunity of being heard, the other clubbing will be done. But once the clubbing has been done in the hands of one spouse, every year the clubbing will happen in the hands of same spouse. Understanding? Hello? Now tell me, what if the total income of both the spouses is same, which is very rare. So total income of this year will be same, no? What about the earlier years? Those total income of earlier years will also be taken into consideration. And the total income which they can earn in future, projections will also be done. And then a decision will be taken by the assessing officer based on the past data and what can be the total income in the future. The assessing officer will take a call that whose remuneration should be taxable in whose hands. Understanding? So this was your note number 2. This was your note number 2, which I've just completed. Okay. So from here we'll cover tomorrow. Tomorrow we'll end this chapter and tomorrow we are going to start with deductions and computation of total income. Very, 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 very important. Why? Because 15 mark compulsory question will be from that part only. And we are going to learn so many things in that. So don't miss tomorrow's lecture. Okay? See you all tomorrow. Bye.